Okay, let's get started here. It is 7:31, 2026, 1:34. Markets are still open. I want to get through this MSTU stuff because we have earnings, and so I want to get into that. I have MSTU $2 puts that I had sold. There's 5 of them there, and it's like average credit 31 cents. Its current price right now is 24 cents, and I'm going to roll these over to next week. Go to here. Oh, what was I looking for? MSTU. Currently on MSTU, it is $1.76, which is 24 cents. That's what I wanted to look at there. It was just 24 cents, which is what they're asking for, is 24 cents. So they're asking for right on the money. And what is the next week's price? It's going to be the 7th. And the $2 puts here is going to be 30 cents. And so it's a difference of 6 cents there. I just wanted to look at that real quick, and we will roll this position, and we will roll it to, August 7th, next Friday. The $2 puts continue, and there's a difference of 6 cents for all 5 of them. Review the order and submit, and done. And we'll go back to the front page here, and we're good for August 7th. So it went through. Puts sold at $2 for next Friday. Then you can see that I already sent the $200 again this Friday. So I'm going to sell another one of these. And then Robinhood understands that because I had sold the $2 puts at this premium, that I have the potential to sell another one. So it's giving me a buying power of 400 instead of 200. And so I'm going to go ahead and sell 2 of those, two more of those. So I'm going to sell to open, and it's going to be 2 more. And we're going to do it for 30 cents there. And review, and submit, and done. Okay, and so now we have 7 sold. So that's that. Still looking at collecting the premiums here, where if in the... Actually, I'll go to the real chart now, because that's done. That's over with. So we'll minimize that so that it's not bright white on the other screen. If we go to here, and we're going to go to MSTR. So for the past couple of weeks here, what is that? 1, 2, 3, 4, 5, 6, which is also all of the Fridays that I had sent the $200 and started that little account, was for this entire move here. We haven't gone anywhere. It isn't moving up or moving down. It's just moving sideways. And so to take advantage of that and make them pay me for stagnating and traveling sideways, I want to sell the $2 puts. And any time that it's not... if it's above $2, then that expires worthless, and I collect the full 31 cents. If it's selling at a premium of 31 cents at the current price of, what was it, $1.76 would be 24 cents, then I collect 6 cents on the side every Friday. And 6 times 7 is 42. That it's not a lot, but on a $1,000 account, $42 off of $1,000 is just short of 5%. And so I'll just take that 5% gain every Friday until this thing decides to move. That if we sit sideways and consolidate and just travel somewhere around that $2 mark, I will either collect the 6-cent premium, or however much it fluctuates through that week, or if it gets up above $2, then the entire thing expires worthless. And then I collect the 31 cents, which is $30, and 30 times 7 is $210. And that's like a 20% gain off of a $1,000 account. So that's basically what that amounts to, is that I'm protected and hedged to the downside just in case it drops, but I'm not just sitting here doing nothing while it decides if it wants to go up or down. If it wants to travel sideways for 6 weeks, that's fine, so long as it pays me. And so if it pays me 6 cents, it pays me 6 cents. $6 times now 7 puts sold. We're getting into at least $1 range that's noticeable. A $50 move on a $1,000 account is noticeable. A $2 move on a $200 account, you're not even going to notice. Like, even if I showed it on there and it said, you went from $200 to $202, it's not remarkable in any way. So, that's set up, and, that's why I'm selling the puts, and I'm selling the puts under $2, is that if it wants to trade sideways, that's fine. Just burn the theta and give me my 6 cents. But if you want to move up, then give me my full 31 cents. And if you want to come down and then it has a value of, say, 50 cents, then I'll just roll it to the next Friday and still not lose any of my leverage. So, that's that, and that's MSTR. We did have earnings, and so I want to go through those. We can start with Apple. And I'm going to go to a daily chart here. So it gapped down like a lot. It gapped down from its highs here all the way down. And actually, let me pull up the NASDAQ and the SPY. So these have been threatening and trending downwards and kind of signaling that the market as a whole wants to roll over. This is kind of saying it here where the MACD had crossed over. It kind of peaked out here. It's losing steam and it wants to go for a rollover. Same with the triple Qs, which is like the tech sector. It's already started its rollover. If it peaked out here at $750 and then at some point this week it had a low, which got bought up, but it had a low of $658. That's almost a full $100 drop. I expect it to do something more significant, more threat to the downside, even if in these entire bars and these entire candles throughout the week it travels from, say, 684 up to 725. Ultimately, this is rounding and it's heading in a downwards direction. So when we look at something like Apple with this large drop-off and that gap down, it does look like that is expected. The earnings came out okay, and then the price itself just dropped out and has a massive gap in it. And I suspect that that's why, because this is, attempting to roll over and find some kind of fair pricing where it's just extremely overextended here. We can see it in the past. Previously, it had crossed over, dropped down, and then came into here, where it was at 289 and then bottomed out at 245. That I would like to see this down, and I would like to see it somewhere south of $280, which is going to be this mean line here. So something south of 280, then we can consider Apple. Down to potentially 263. So this did have a very, very large gap. Immediately after earnings, it just cratered, and I'm still not interested in it. This is a large drop off, but I am not particularly interested in Apple at this price. I want to see it at sub 280, potentially 260. Somewhere in there, I would consider buying Apple, but at these prices, I'm not terribly interested. So that's the coverage on Apple for earnings. They did fine. They beat earnings estimate $1.88. They actually came out with $2.02. Let's look at quarter over quarter was just a penny. It's not that significant, but year over year, if we just kind of glance at what they've been doing as a company progressively through time, let's go to the 5-year. We have like $1, something with $1 here, $1.24, and that's probably, no, that's 22 cents. That's the dividend. So I don't know what their earnings were before that, but we have like $2.10, $1.52, $1.20, $1.29. Then you can see that obviously the next year their earnings increased, where there's a handful of $1.20s in here, and there's only $1.20 in here, and then the rest of it's bigger. So like year over year, that got better. Then the next year it got slightly better. They have a $2 one in here, so they're breaking into the $2 ranges. And then here they broke into the $2 ranges, and they're kind of floating around the $1.65, $1.57, $1.85. They're floating around, let's say, $1.70 on average. And then here they've obviously broken that average this year. So year over year, they're doing better, and they're still growing as a company. So there's nothing financially problematic about Apple and their success. It's just that I don't like the current price and where it is. It's $300. It's very overextended, and I do not see the value in it from my perspective of wanting to buy it and become an investor in Apple. Its current PE ratio off of this drop is still 30. I would like to see 30 as an ending PE ratio, where I want to be buying low and then potentially selling high at 30. So I would want to be a seller here. Now, obviously, I'm not a buyer yet. It needs to get down into this range, that 260-ish range. And then once I've bought it, then I would become a seller in this area, that 302 30 PE ratio, where I would consider that extended and overpriced. And so that's just from my perspective, that's where I would like to be. That I don't want to pay $300 for Apple today. I'd rather pay $280 or $260, somewhere sub $280, preferably $260. So just my perspective on where I would like to be a buyer at. But their earnings were fine. I know that there are people out there who like Apple as a company. I don't necessarily buy things based on favoritism or the things that I like. Because if I bought the things that I like, it would be, I don't know, let's say Toyota or, Copenhagen chewing tobacco. There's no future exponential growth happening with Copenhagen. So I don't really buy it based on how I feel about the company, but I'm not really a fan of Apple. I don't have any Apple products. It's not something I have really any interest in buying, and I don't believe in the future of Apple. But I can't deny that they are a $1 trillion company and that they are very successful and that other people do like them. And so I would be remiss to not at least consider the idea of becoming a shareholder in Apple, even if I am not a fan of their products. I just not a particular interest in this $300 price. But if somebody else is a big Apple fan, if that's like your thing, your technology company of choice that you really like, I still don't like the price, honestly. But to each their own. If Apple was something you've been waiting for, you saw these big pushes and you wanted to get in, I don't really say even go ahead. I really don't like this price. But if it's for you, then it's for you, and go ahead and do that, I suppose. It's just not. I would like to see this much lower before I felt good about it, and I can talk more about that afterwards, as an ending thing where we go through what we actually want to buy. Let's look at the other company that had earnings, which is Amazon. I own Amazon, so I'm going to talk about selling calls now. Back here, we had acquired some Amazon, and then I have Amazon from years previous, just like some remnant shares that I have held on to over time. This push is becoming overextended. I really do like the future of Amazon. I like their diversification. I like who they are becoming and what they are growing into. I feel like if there's 3 companies that are the most impressive of the Mag 7, Amazon is one of them, Google is the other, and Microsoft is the third. So the other additions of the Mag 7 are still great companies, but I think that there's a significant difference between Amazon, Google, Microsoft versus the others. For me, Amazon's business foundation is built on delivering packages. They have the Amazon store. You buy things on the internet and then they're delivered to you. It is a revolutionary, innovative idea that they had come up with, and it's going to stand the test of time and be better to serve their customer base than anything else that could even be created and try to pose competition against them. That I am pretty confident in Amazon and what they created, and then who they are going to continue to be. But it's not as if that is the only thing that they do. They have started diversifying from their core business model, and started expanding into additional revenue sources, like Amazon TV, where you can watch shows on it. I'm not a big fan of the Amazon TV. What is it? Amazon Prime. I don't like the structure, the user interface. I don't like the catalog of shows that they have available. And I don't like how they have it monetized. It's just I'm not a fan of using it as a consumer. But it's still there. It still is used by people, and it's just one branch of their business that isn't even their core function. And so it's just something impressive that they're doing. And I think that Amazon is one of 3 of the Mag 7 that are extremely interesting for the future. That being said, I do plan on selling this. I don't actually want to fully sell it, but I can confidently sell calls. And then if those calls get executed on Friday, I'm still okay with it. So I want to look at the pricing here to figure out where I would like to sell calls. And I have an end of year price target on Amazon of about $300. $300 is my price target 6 months from now. It's just very overextended and up here 1.5 standard deviations away. So what I would like to do is at least try to target the 280 area where it had previously peaked out at. That would be a break of new all-time highs. And to do that today or next week, because I'm going to sell the calls to expire on Friday, if it does that next week, then that is 2 standard deviations away and extremely overextended versus the reversion to the mean. That's generally the target I would like to look for, is something like 280. So if I look at the options here and I look for the 7th, and I want to be somewhere in the 280 area, the 280s right now are selling for $2.25. The 277.50s are selling for $3. $2.77 plus $3 is $2.80. So that's the one that I'm going to sell. Is that I'm basically getting the $2.80 price at $2.77. The $277.50 would be just below a break of new all-time highs. And so if it goes there and rejects and comes down from like a day trading perspective, I guess, if it goes for new all-time highs, rejects, and comes down, this still expires worthless. I keep my shares and I collect the $300. If it goes up and then breaks through, it's going to go then wherever it wants to, blue sky territories towards the upside. But I reap all of the profit that I had got from traveling from sub 225 all the way up to 277 plus the $3. Then I'm more than happy to take that profit. There is a lot of profit inherently existing within my ownership of the shares, that if it sells, I'm okay with selling it. And because it's so overextended, I'm more than okay with selling it. So I'm going to look for that 277.50 mark, and that's where I'm going to sell my next Friday calls. If it doesn't get to 277.50, if my calls do not get in the money and get executed and they have me sell 100 of my shares, then I'll just roll it out for next Friday and I'll figure out where that price is. But that's how I'm going to assess selling the calls. And so now I know that off of one set of 100 shares, I'm going to have an income next Friday of about $300. And so I will just kind of keep that in the back of my head when I'm dealing with what I want to buy. As far as the other companies are concerned, that I have $300 kind of already banked, that from selling the calls, that whether it expires worthless or it doesn't, I still have that $300 that I can apply to whatever it is that I want to buy. Google is something I'm going to buy. You know, I had talked previously about Google and covered that last, what was that, Wednesday maybe? I believe so. That I'm going to buy Google. Of the three that I want to be involved with, it's Amazon, Google, and Microsoft. Microsoft moved up, Amazon moved up, so I'm going to be selling calls on Microsoft and I'm going to be selling calls on Google, or I'm going to be selling calls on Amazon, but I'm going to be acquiring Google shares. It had this large drop off and then it rested, started climbing, and has recovered back through the gap fill. But I want to start acquiring this, and so I'm going to start buying this on Fridays. Google's earnings were great. They have a capital expenditure question of how many billions of dollars are they going to spend for their future AI projects, and I'm entirely and completely okay with it. That I want to own Google. Oh, let's look at their PE. Currently 17, call it 18. This is exactly where I want to buy things at. So 18 is a great number for me. I like that. Like I said, with Apple, I want to buy at 18. I want to be a seller at 30. And so at 18, we have, let's call it 2x upside to get from 18 to 36. That's what I'm looking for. So I'm going to be a buyer of Google here. It did drop down. It has this when it kind of declined the opportunity to pay that out to even get down there. It had this drop off and then it just recovered. It just said no thank you. And the strength of that kind of recovery is safe to me. That I see the strength of that kind of recovery and say, okay, I wanted to buy Google here anyway, and now it's just giving me more confidence that it is a strong and rebounding company off of what it had dropped on earnings, that I'm more than happy to start getting involved here. So anything on Google, what is that, sub 380 on Fridays, I'm going to be a buyer. The PE looks good, the earnings looked good, and that 380, even though this is very high on the charts, doesn't concern me, because they had an exponential growth based on their earnings previously and the future of Google, that I find this to be an opportunistic buy, and I want to be involved with it. So I'm okay with buying this, and I'm okay with buying at anything sub 380. That is a check yes for Google. That's something I am going to start buying on Fridays. I'm also going to be continuing to buy Meta. Simply because they're low. They're so low on the chart. I have a pretty good average on Facebook, and I wanted to see what they did through earnings so that I could survive out any kind of volatility on it. And now that they drop back down, I'm just going to go back into buying Meta. I already have a lot of shares of Meta, so I'm not going to prioritize it. It's going to be a more of like a secondary background type of thing, where Google is going to be up front for me, but Facebook and Netflix are going to take like a back seat. They're just going to catch like the extras. If there's, let's say I have $300 for this, I'm going to buy $300 of Google, and there's nothing left over for Facebook, and there's nothing left over for Netflix. But if it was like $320, and I said, okay, $300 for that, and you guys can have the spare change, you can have the $20. So Google is a priority buy for me. Meta and Netflix are just on the back burner. They're just there. I already own a lot of shares of them. They are still low, and so I can continue to acquire them. But I don't have to try and get fully involved with them, because with a drop like this, in no rebound like Google had, I don't see a rush. I don't see a reason to try and get in there quicker, especially when I've already been in there for 10 months. I have plenty of this that I don't have to rush into it, but I will continue to buy it. Just continue to add dollar cost averaging and getting the average even further down. So future of Meta is, okay. What is that? Not that one. Let's look at their PE. PE is at 21, so PE is still good. We could still be buyers here at the 20-ish region. That I'm okay with that. The future for Meta is interesting to me, and so I'll cover that after I've gone through what I want to buy. Microsoft, I'm going to start selling calls on as well. Microsoft is something that I want to own, and I want to continue to own it. And so this hasn't reached a peak of what I would like to see out of it, the way that Amazon had, here, where it's getting overextended, and I want to be prepared for that. Microsoft hasn't fully peaked out. I would still be looking for an end of year price target somewhere 500 or 515. And, we're not there yet. There is still upside available, but it peaked out here last earnings. And, if it doesn't want to break through there, that's fine. But the catalyst to get it to move happened yesterday. We had the earnings. So the catalyst to get it to move and to get it to break through didn't fully push it. That I'm okay to sell calls here and to start lowering my cost basis on Microsoft. If it wants to break through, then I'll just roll the calls out and move them up. But I'm here with Microsoft for the run to 500. If it wants to reject here, I still want it to pay me. So with that in mind, I'm going to look at the August 7th, which is next Friday. And price-wise, we are looking in that breakthrough peak area. And that's going to be here. Let me make that smaller for just a moment. So we're currently there at 470. That's the general area I want to place my calls at. Oh, and the 470s here are going for $4.80. So if it goes to 470 and rejects, I collect the 480. If it goes to 470 and then breaks through, then I sold these for $4.80 that I'm basically covered almost all the way up to 475. Let me locate 475 on... Let me just make that. Okay, so previous peak was 472. And 475 is going to be up here. That it seems like it's a pretty reasonable buffer area for it to try and consolidate sideways or attempt to break through, but that it may not happen between now and next Friday. And I still want to hold my shares. So I don't actually want it to execute. That I'm going to pick that 475 area, 470 plus. That actually might move that up. 475 seems good to me instead. Because the 470 plus $5 gets me to 475. I think I would rather target that 475 and sell this for $3.40, which covers me up to 378. I think I like that a lot better. So that's the one I'm going to sell, is that 475 call for next Friday. So that's the price range that I'll target for the range that I think we could get to, but still stay below, so that I realize the entire premium collection without actually selling my shares. And if it goes from 475 and then it goes up $4, I'm covered to 479. Anywhere in that region, I can still just roll them out, and then I could roll like the 480s or the 490s of next Friday and just stay out ahead of it. The top on the 1 year chart here for 2 standard deviations away is going to be about 476. So that, again, that just reaffirms that I like that price. And what is this one? That's going to be 490. So if I want protection here, this is a good consolidation there with likely resistance around 472 and then a secondary, breakthrough on this consolidation here of 490. That if I see this get in there next week, if this moves up, then it has to work its way through 470 as like a ceiling. Then it has to break through, and it has to try and get through the next ceiling at 490 while also retesting the 470, bouncing off of it, and likely consolidating in some kind of bull flag sideways, similar to this back in October of last year. Breakout, consolidate sideways, find a floor, find a ceiling, work its way through there, and then break out again. Then consolidate sideways in a bull flag, sit sideways, break out again. When it comes back down, retest that area. And so what I want to do is try to find that consolidation area that I could realistically sell calls just above it so that it has to fight its way through, that somebody has to fight for my shares. And if they don't get through, I collect the $400. If it does get through, I still have a very easy range here to roll that up and out of and still keep my shares, roll the calls out to the next Friday, August 14th, I believe, and do it again. And just either take the ride up or roll those out and collect the premium. So that would be the target area I have for Microsoft, and I'm going to start selling calls off of my Microsoft shares. On MSTR, we are still obviously consolidating sideways. Nothing has really happened. This is purely accumulation. So this is going to be something that I continue to buy. I will add this to the list. It's been on the list. I don't really have to add it to the list. But this will be on the list with Google. And what was it? Facebook and Netflix have taken the back burner. My priority buys right now are going to be Google and MSTR. So Google and MSTR are the two companies that I am going forward going to be buying for the next 12 weeks. All the way till next earnings, which is 12 weeks or 3 months from now. If I can sell calls off of Facebook and off of Microsoft and off of Amazon, that will fund my purchasing of MSTR and Google. And so for every Friday that I have those calls being sold and collecting the premium or the theta decay off of them, then those funds can be applied to my top priority purchases this quarter, which is going to be MSTR and Google. MSTR is still tracking sideways. I've been buying it for quite a few weeks. I think this current section is 6 weeks long. So this current section is 6 weeks long, and I will be buying this for the next 12 weeks, more than likely, unless it does blow up, head upwards, get above my 150 area price target, and then I'll just start selling calls off of MSTR instead. But currently, it is in an area that I want to dollar cost average into it, and so MSTR and Google are my 1 and 2 top priority buys for the next quarter and the next 12 weeks of dollar cost averaging on Fridays. Oh, Netflix is obviously down. We covered this one. Can still slowly DCA more of this, drop the average down, and just acquire some more shares. I already have a lot of shares of these, so acquisition isn't the real priority. And I also have a very low average on Netflix, so dropping the average isn't a high priority for me either. That whether this goes up or down, this is completely on the back burner for me, and I can just visit this next summer and see if Netflix has changed their business model and is doing something better. But I'll cover that on the ending discussions as well, because I have one more company to get into. So Netflix is probably fourth on the list. If 1 and 2 are MSTR and Google as like grade A priority, and then as like an and also Facebook is there, and then Netflix as like a list of priorities of things that I'm getting involved with. I'm already involved in Netflix. I'm already involved in Meta. I don't need to become more involved. I already have plenty of it. And then Tesla. Tesla is a buy. Like, it's a buy. Who doesn't want Tesla? So For anybody wanting a third priority of like Google, MSTR, and Tesla. Not an and also, not like, we'll throw that in here or there. Tesla is a top priority buy right now. I obviously am an owner of Tesla and have had Tesla for a long time, that I don't need to buy this, and I'm not adding this to my personal priority list, but of the top 3 things to buy right now, Tesla is most certainly one of them. So if there is a priority buy on Tesla, it's right now. I had looked at this, and we can get into the details for it. I had looked at this with my uncle, and he is going to prioritize buying Tesla. That is his number one. He doesn't need to buy Google. He doesn't need to buy MSTR. He wants to focus Tesla because Tesla is a excellent company to get involved with, and they are very, very low. So take full advantage of this opportunity, and I will explain the entries of what I have involved my uncle with. Currently, Tesla is sitting around $310. It had gapped down from $370 down to $340, and then it fell through the floor and is now consolidating sideways, just trying to find some sense of stability down here in the gutter. I want to see this at least $320 to get back within reasonable training areas, not beyond 2 standard deviations away. We happen to have nice, easy candles to look at where we have this very large gap that we can just target there, and we have the top of the gap here, or the bottom of the gap at 340, and then we have this standard deviation rejection off of this like doji candle that's kind of set up here. So the translation on the TSLL side is going to be very simple. Right? We have this large gap. We have this area here, the top of the gap here, and then this the top of this doji candle there. So if I go ahead and mark out some lines, I want to put a line here at the top of that doji candle because I know that on the Tesla side, that is a full standard, or a full 2 standard deviations away. That's how it translated on the Tesla side, is that here, the top of that was 2 standard deviations away. So I'm just translating it over to the TSLL side. That is the target that I would like to get above. I want price to find some kind of stability, even if it stays low. If the price stays beat up for some time, that's okay, because it gives us more Fridays to buy it. But I want to see that at something north of Tesla 320 and then find stability across. That Tesla 320 is going to translate to like Tesla or TSLL $7.60. Then I want to put in a line here. That's going to be the gap fill. That gap fill exists at about $9. And then the full gap fill here for recovery is going to be at about $10.50. So those are going to be my regions that I would like to target and stay within. And then I can proceed with how I had recommended my uncle navigate this. So what he did was, and I'll talk in increments of 100 so that it's easy to understand buying and selling calls. So what he did was he immediately bought 100 shares of Tesla. Just immediately on principle, because it's so low, he bought 100 shares. At the time that he bought 100 shares, he immediately sold 1 call. You know, he sold more than that, but I'm going to detail it in increments of 100 and 1 call. So he bought 100 shares of TSLL, and he bought it here. Then he sold 1 call. What that does is that if you enter Tesla right now at $7.26, it costs you $726. This has a drop down of $6.70 with no real strength showing up yet, that there could be a threat of continued downside. that I want on my entry to be as protected as I can be. I also want to own this. So we spend $700, we buy TSLL, then we immediately sell a call on TSLL. He sold the $8 call. The $8 call is roughly a 10% move. So if TSLL goes from $7.26, it goes up 10%, then that 10% move is 72 cents, gets us from $7.20 to $7.90, which is basically $8. So if it wants to recover and it wants to get back up there, it has to travel a full 10% in a single week in order for this to execute and make me sell my 100 shares. If it does that, then I make 10% in a single week, and I just say thank you. I'm just like, all right, well, I'll just take 10%. Like, I'd be more than happy to just rinse and repeat that action every single Friday and do nothing else but that. So I'm more than happy to make that 10%. $7.90 as a threshold is basically $8, and so we sold the $8 call, and that protects us to the downside because we own 100 shares of this. So we sold the $8 call, sold it for 15 cents at that time. Sold it for 15 cents. That gives us downside protection of 15 cents because we're going to reap that premium. If we reap that premium because it does not get to $8 and TSLL actually goes down, if Tesla goes down, then we're covered 15 cents to the downside. It decreases our cost basis from $7.26 to $7.06. No, $7.11. So now it's like our technical average of what we bought it for is $7.11. And then next Friday, we just do it again. We own 100 shares, so we sell a call. We sell a call for $8 and we sell it for, say, 13 cents. Then now, if it doesn't get to $8 and it doesn't pay us 10%, then it has to pay us 13 cents. And if it pays us 13 cents, it lowers our cost basis. And so now we lower our cost basis from $7.11 to $6.98. And if it wants to keep doing that, it can keep doing that. But we continue to protect the downside and we continue to lower the cost basis because we own 100 shares and we don't want that to then just drop out and leave us, just dying in a ditch. So if this wants to keep dropping down, we will keep chipping away at it 1 week at a time, 13 cents at a time, lowering our average. So then we're at, $6.98, and then the next week we are at $6.85, and the next week we're at $7.73, I think, and just slowly over time, $6.73. Slowly, week to week, we continue to chip it away, 13 cents at a time. And then regardless of what TSLL does, our average will continue to get lower, even if we are not purchasing more of the shares. So that was the first step. That was the first thing we did, was we bought 100 shares and then we sold a call. The second thing we did is that we do want to acquire more of these. So let me go to a smaller time frame. So we want to acquire more than 100 shares. If we want to acquire more, let's say we want ultimately to own 1,000 shares of this, then what I had said was immediately buy 500 shares. Just buy it. Just buy it cold with a lump sum of, the chunk of money that you're willing to fund this with. So first thing we do, buy 500 shares. Second thing we do, sell 5 calls at $8. Protect our downside. Then, the second thing we did was we still want to acquire 500 more shares of TSLL. So we sold 5 $7 puts. This protects us further to the downside. We haven't entered those 5. We don't own 1,000 shares yet. We own 500, and we are going to acquire 500 more over the weeks. So we sold 5 puts at $7. Currently, TSLL is at $7.27. So those $7 puts are going to expire worthless. That's today. The $7 put is worthless. It's zero. It's going to expire worthless, and we collect the premium. We roll this out to $7 next Friday is going for 25 cents. We haven't even begun to buy those 500. We already bought the first 500, but we haven't even begun to buy these 500, and we are covered on that buy down to $6.75 just out the gate. If Tesla closes above $7, which it does, here, that expires worthless. We collect the premium. We collect the 25 cents. That 25 cents can now be applied to lowering the cost basis of the first 500 we actually own. So we sold a $14 call, and then we sold a $25 $7 put, which in total means that we have collected a 14-cent premium and a 25-cent premium, which gets us to 36 cents. If we can repeat that every Friday, we can very, very quickly lower the cost basis of the first set of 500 that we had bought. And so we leverage the capital that we have available to lower the cost basis of the entry on Tesla. And so that's what we are set up with here. The plan is to buy 1,000 shares. We bought 500, and then we sold 5 puts so that we can collect this premium or be protected to the downside on any downside moves, because we still do want to collect an additional 500 shares. We just want to be protected while we do it. And in the meantime, between now and next Friday, or the Friday after that, or the Friday after that, in the meantime, while we are traveling sideways or not doing anything, or TSLL is continuing to drop, then we are continuing to lower a cost basis of the thing we actually own by 36 cents at a time. 36 cents at a time over a 12-week period, over the quarter. 10 weeks is easier math. That's $3.60, which means that potentially we could lower what it actually cost us to buy the first set of TSLL 500 shares. We could potentially lower that by an entire $3.60, which is basically half. That we're paying half of what this current price is if we can navigate it properly. And so that is currently what my uncle is set up and doing, is that he had bought 500 shares and sold 5 calls, and then he had sold 5 puts in order to either acquire an additional 500 shares or to have it recover back into this area, that 750-ish line that I had drawn. And if it recovers there, then we can easily sell calls down below this 2 standard deviations away, have them expire worthless, and collect the premium. If we do actually get price action up above the 750 area, then 750 would be the next calls the next puts that we could sell. We sell the 750 puts, and they're currently offering 51 cents. It's now, instead of 25 cents, we are collecting 50 cents. But we could stay to the safe side and just continue to sell the $7 ones, even if we are at 766 or 750 or anywhere in there. We could sell it 50 cents down at $7 so that it never actually executes, and we just collect that premium and lower the cost basis to something more sustainable on the 500 that we originally bought. And so that is how I had set my uncle up to navigate the next 12 weeks. It took us almost an entire year for him to raise enough money, $200 every Friday for a year, to now have the funds that make this possible. That now, let's say we have the outlook that we want to own 1,000 shares of TSLL. That is going to require $7,285. Not everybody has that immediately. Not everybody has that tomorrow. And so it was a growing process. But now that we have grown to where he now has that available, now we can fully exercise the navigation and proper entry strategy into TSLL. He has $7,200 available. He can buy 500 shares, and then he can leverage the remaining $3,750 to sell puts off of and collect a premium to lower the cost basis. That's like the entire mechanism of how I operate. That's like the entire mechanism. That is the whole procedure that I build towards, is put in $200 every Friday for, let's say, a year. And a year comes out to $10,500. You might have to dig into wherever it is you have to dig into to have that $200 every Friday. But once you have it, we can get to work. And so now we have the opportunity to get to work. And that is what he is doing now on Tesla. If he sells those, if he sells the puts every Friday, if he sells the calls every Friday, he works both sides of it. And it lowers the cost basis of what he had to put into Tesla in order to get something back out of it. If he sells the $8 calls, then that is 13 cents, which is $13. $13 times 5 is, what is that? 50 plus 15 is 65. So it's $65 of income off of the $8. And then the $7 puts are 25. And if he sells 5 of those, that is $125. So 125 plus 65 is $190, which is basically $200 every Friday. And so everything he put in, he can now start taking out. That he put in $200 every Friday, and now he can start taking $200 every Friday. That this will lower his entry, lower his cost basis, and the $200 that he had put in for a year, he can start now working it back out and into his pocket every Friday for the next year. If we can navigate this properly in this area of $7.27. If Tesla does recover and it starts climbing back up, then we want to start navigating around the $9 and the $10 area. And what that will do for the options is increase the premiums that are offered. So instead of 13 cents and 50 cents, it would be something like 25 cents and 70 cents, which then just increases the amount of premiums that he will be collecting on Friday. But it all starts here. And so he is prepped and ready and working his way through that. And I personally believe that Tesla is the company to do that with, especially with how low TSLL is. That some of the other ones, the Googles, the Microsofts, the who is that? GGLL, MSFU, NFXL, METU, METU. Some of those prices are $22, $30. That it takes 20,000 or 30,000. Tesla is a very, very good setup for that. And so he is set up well. He's ready to navigate through that. And those are the puts and the calls that I had talked about him selling. And that's how he will proceed from week to week, traveling back up as Tesla recovers. And so that's set up, and that's how he's going to do it. And so yeah, that's that. That basically covers Tesla. It covers everything that I'm going to buy. I plan on buying Google, and I plan on buying MSTR, and Tesla is then obviously a very high priority for anybody else who wants to become involved with it. As far as Apple is concerned, not interested. Who is the other one? Amazon we're selling calls on. It's starting to get very high on the chart. And Microsoft, I want to start selling calls and watch it as it either tries to get through this previous peak or, drop back down. Either way, I want to be prepared for it, and so I'm going to sell calls here. And yeah, that's it. That's the video. That's basically the coverage of earnings and my plan for the next 12 months or the next 12 weeks. So yeah, that's that.